Hey, welcome guys to our show 3D Traders. Today we're going to talk about how to pick the wrong stock and still make money. And that's right, we're going to talk about timing, cycles, and sectors. So it's going to take a lot of pressure off of you. Instead of finding the exact stock, we're going to show you some typical ways to find a sector that will lead you in the correct direction. So that's our topic today. Let's get right into it. I am actually here with my two experienced traders, starting with Patrick. He's our future Mount Kilimanjaro hiker. And last but not least, we have Everson, who's going to be our, well, actually, he was a former track star. He was the legend
Tracks.
back when I started in high school. So, hey,
Not at
let's
all.
get right into the meat of the potatoes. How important is timing to you when you're looking at stocks? I want to start with Patrick. Just the word timing, is that important for you, or are you more interested in the concept of the perfect stock? Let's hear your input.
Well, I think so. You know that there's two different philosophies behind it. Some people say that you don't want to time the market. What's more important is
Yeah.
time spent in the market. I don't totally agree, especially if, like us, you're more active traders. I think that timing is very important, and
Yeah.
that's what we're going to be talking about today. So personally, I try to time my entry, especially if you're going to be making one and done type investments. Like if you're going to keep pumping money into the stock over time, that's a little bit different. But a lot of us often we start a position and we might buy a little bit more, but we're not buying it into it like for months or years, right? So for me, timing is very important. And of course, as you mentioned, like picking certain stocks that are better than others.
So, Everson, do you have a counterpoint to what Patrick was talking about, or do you sort of agree with his view?
No, I agree actually. So yeah, you shouldn't try and time the market, or you know, but you have to have a sort of a vigilance to be able to identify, when is the best time to get into a stock, or even to jump into the market. If some of us were bull traders, some of us were bear traders, so you wouldn't want to jump into the wrong cycle. That being said, I know I'm going to talk about something we don't really, or we kind of shied away from talking about. I'll give you an example. A stock that I just picked up last week is a stock called McKesson's. For those of you at home, MCK, that's the McKesson stock ticker symbol. So I bought it around Wednesday of last week in a thought process that it was going to begin a rise, and it actually did. It rose enough to create my call position. I had a July 17th call position to 100. I think it reached up about 150 at one point. So I take low risk tolerance. I did that just as a trade because I thought it was too low on its cycle, and sold out on Friday. So I held it for about 2 days. Third day I sold, and 127% profitability. So it was a good trade, but I got out of that trade cycle, and I think that we have some volatility from there, but it's definitely something. Timing and cycling it correctly is definitely something to be looking forward to.
Yeah. So, we're talking about cycles are very important, and Everson actually gave you
Sorry
a
about that.
situation how that impacted his trading last year. If he can get a hold of his phone over there. But, to me, timing is so important. It's crucial. That's where you make your money. In terms, trend is always your friend. If you're going against the trend, you're going to get hurt. And so I hear all these stories all the time. Hey, Max, I love this stock. Here's the company. This is what it's coming out. And here are the fundamentals. And this is the perfect play for me to do. And then I'll look at the chart and it's right at a resistance or something like that. So
Mm,
it doesn't matter if it's a perfect company, it's the wrong time. So I'm a huge fan of timing. That's why I'm a chartist. The chart tells me when to get into a stock. So let's go on into cycles. What kind of cycles have we seen in the market that are reliable, some that are not? Do we pay attention to cycles at all, or we just, sort of look at a more narrow picture? I want to start with you, Everson. Cycles. What's important about them? Do you follow them at all?
yeah. So as far as the trading cycle, I think we're in a pharmaceutical cycle right now. I mean, I'm just modeling after stocks like AZN, which is a European stock that's pushing forward to really getting approval for one of the closest in Europe for the approval for the vaccine for the coronavirus. And then we got mRNA, which is local here in the United States, and Novavax. So in my opinion, those are the top gainers, and I think they're the closest to being able to create this vaccine. But I mean, when you get valuations of the stock popping over 10%, you know, me as a Delta trader, it's gonna turn heads, right? So I see value in these growths in these stocks as far as growth is considered. So I think currently we're in that cycle. I mean, we just fallen off of a tech cycle, and that's an interesting point too, because I think it comes back, the tech cycle. But as of now, I think that it's run up too much and it's sort of got parabolic on some of those stocks. So I'm not going to be too interested in a pop with those. Okay. I might, you know, look at it going down a little bit. We had a debate prior to the show in the pre-show, and we kind of talked about it.
It won't be a secret if we keep talking about it.
Yeah, well, we got to lure them in a little bit, you know. So we talked about AMD, and I felt like AMD was going to go down. And Max, you decided, I mean, I don't know if you want to talk about it a little bit, but you decided that it was going to go up according to the charts. I thought it was going to go down. So this is kind of those principles that I'm looking at, that it's ran up already so much that I think that people's expectation would be for it, especially with the earnings that Patrick had mentioned, that AMD would go up. But because it's in the tech industry and because of how it's positioned, I see the same repeat of what's happened in June the 27th or 14th, June the 27th or June, what's that?
14th? June 14th, you said?
No, it was actually like either June the 17th or June the 27th. I'm showing a repeat of what it did in the charts back then. So I think it goes down a little bit. I'm price pointing around maybe $250, not $250, but $52.51 to $52.68 as it declines before it starts to go back up again.
So Everson, you heard it. I mean, you heard it first on this show that Everson's talking negatively about the tech sector. You're not going to find that information out yet on YouTube except for this show, 3D Traders. So let's go with Patrick. How important are cycles to you, and how do you trade around them, or do you even care about cycles?
Well, first of all, I'm a little upset that Everson is stealing my thunder here because, yeah, well, there's two things. First of all, we have to remember that there's multiple cycles going on at the same time, but at different stages. And the reason I'm happy that Everson brought it up is, as much as the tech sector has been extremely strong and really helped sustain this like growth in the past 3 months and recovery, the issue is that now it's priced to perfection. Like the delivery has to be perfect in the next few months, and
right.
You know, the growth until next year for it to make sense. That's why we saw Netflix take a big nosedive this week, even though their earnings were pretty good, right? Their revenues are up, they got more users and everything, but because it doesn't match that absolute perfect scenario, it's down. So I think we've alluded to it in the previous episodes, but I think that the tech sector is priced to perfection right now, and that's a problem to where I think that now the brakes are going to have to start coming in with the tech sector. But at the same time, if we're thinking long term, like it depends which time frame you're looking at for your cycle. And what I mean by that is, for example, for me, healthcare is going to be continuing to be a really good sector for the future because of the baby boomers. Right now we have the crisis. Just the healthcare in general is a sector that's going to keep growing. So, you know, the time frame is really important, but there's always one industry that's at the right part of the cycle for you to invest in. So I know that right now a lot of the valuations are really high, but there's always some like niche thing that people aren't looking at.
So I agree with them. You know, cycles are very important. There's always money flowing into to a sector that sort of raises the tide for the entire sector. Now, let's say the economy was bad. That sector would usually be staples. things that people are going to buy. It doesn't matter if they have money or not. Toothpaste, Clorox, laundry detergent. So that's where you'll see a lot of people store their money because, it's a little bit safer. It looks like Patrick has a question there.
Yeah, I just want to add something. So just to talk about right now, we know that the electric vehicle stocks, like that's a cycle where it's really hot, right? They're extremely, people are excited about it. They're willing to bid it up extremely high. But at the same time, a company like that's going to be emerging, Multiplan, is going to be merging with CCXX, right? No one is paying any attention to it, even though the company is generating $850 million in revenues. So that's what I'm saying. Like, people are focusing on certain parts of the economy, certain sectors, where others are completely ignored. So you have to think outside of the box. What are people missing? Max loves saying this, and he's going to appreciate that. You can't follow the herd all the time. Yes, sometimes you can use that momentum in your favor, but other times, for long-term investing, you just can't do it. You have to look for things that people aren't paying attention to.
Yeah, and that's where the cycles comes in. And in fact, there's a playbook that tells you exactly which sector to go for, depending on how well the economy is doing. Is it sort of at its peak, about to decline? And so I pay a big time to the cycles because I want people to pour money into that sector. I don't want people to be pulling their money out of that sector for whatever stock I pick. That way, even if I don't pick the perfect stock, it's being held by multiple investors that are investing in that sector, and it's going to raise the whole tide. Instead of going into a sector that's declining and still getting the best stock in that sector, well, people are pulling money out of that sector, which means all the stocks are going to go down. So you're sort of fighting that trend. So let's move on.
I think Jefferson has a question too.
It's question platform here. For the podcast listeners, they're actually raising their hand, which is pretty funny. It's never happened on this show, but let's start a new trend, I guess.
We're changing things up. I just wanted to mention now, just be aware, because sometimes I'm not saying that this is what's happening, Patrick, but with that CCXX, right? You can see it's currently trending and everything, but because of its asset acquisitions rather, and shares exchange, and as far as the mergers are concerned, is this money that's just being cycled in for the time being, and it's going to be shifted out. I know a lot of companies are doing that just to pretty up their books a little bit. It does increase value for the stocks, but institutions, they like to just move money around. So is this just because money is moving around, which leads it to maybe a 2-3 day trade, or is this something that's permanent?
Well, so
you guys want to talk about CCXX right now? Well, if you're looking at the chart, it's not a good time to get in because it just created a evening star, which means it's going to retrace, but the overall momentum is going up. So just wait until it bottoms out, then you can get in.
Exactly.
That's what I'm saying.
But
so
you guys have
all I wanted to mention that for is, if you look at a stock like SPAQ, which has a lot of excitement around it, even though I thought it would go higher, but it peaked at $17 or something like that, right? But the prospects long term, in my estimation, because I've analyzed the stock, the risk versus reward is much, much, much worse than CCXX, which is going to merge with Multiplan, an existing company that's helping insurance companies. So it's going to be extremely profitable. But if you look at the excitement level and how it pushed the price up, it didn't do that with CCXX. So that's my point, is some sectors aren't sexy, so people aren't really putting money into it. But that doesn't mean that over time it's not going to be extremely profitable. So sometimes you have to look at that, think long term, not just what are people excited about right now.
Well, It's interesting that you talked about long term, because to me that means you didn't time the market correctly. And so that's why I think the cycles are really important. I don't want to just find the perfect stock, be at the wrong time, and have to wait a long time. Well,
the floor for this stock is about $11. It's not going to go under that because that's the start price.
Yeah, but you're still waiting for a profit. I'd rather get to a stock that's going up, and my target's usually going to be 15 to 20% of the movement that I've missed, because I want to be part of the other 60% as it goes the direction I wanted to, and I'm going to miss the last 15 to 20% because that's for someone else. I wanted to get out a little bit early. I'd rather get out early than late. That's just my opinion. But let's move on. You guys have sort of talked a little bit about your favorite sectors, but let's revisit that topic and go with Patrick. You know, right now, what's your favorite sector to get into? Regardless of stock in the sector, you know, what's your go-to sector right now?
Well, it's not the travel industry, that's obvious. But yeah, so right now I'm not stuck on one specific sector. Right now, I'm looking for more niche stocks. I'm really focused on the SPAC plays right now. For those that don't know what it is, it's the special purpose acquisition companies, which are very hot right now. So I've been focusing a lot on those and looking for those smaller companies that, you know, trying to pick them really early so that I can get the best price. Max, like, you're going to be disagreeing with that, but so because I see both short-term plays and long-term plays with them. So I'm not looking for one specific sector. However, if we're looking at more like the general economy, as I mentioned, I think that the tech is a little overheated right now. So for me, like, good plays would be in the healthcare type sector, just because of the fact that it's going to have long-term growth because of the population. I mean, we can't escape it. Okay. Oh, just a little plug. If anyone is looking for my play of the week, look into my channel. And I've been talking about Golden Nugget Online. That's my position of the week.
All right, look at that. And what's the name of your channel?
There's no name. It's just me, Patrick.
Patrick. All right. And so, so, you know, we're talking about the healthcare
he needs
sector.
No name.
Exactly. I need no introduction.
And that's interesting that you said the healthcare sector, because that's sort of one of mine as well. But let's go with Everson. You know, what's your favorite sector right now that you believe a lot of people are going to pour money into?
So I have to go against what Patrick was saying about the travel industry, only because I think it's we can't have a valuation that gives it a definite direction, right? So and this is really interesting because I'll never do this, but I looked at Carnival Cruises stock ticker CCL. I saw that it was at sort of a bottom, and it did sort of a pivot on Friday. So I got in on a call option. I'm up 7%, and so, you know, I'm a buyer of this for maybe about the next 2 to 3 days. Probably not 3 days, but the next 2 days. But I think that when it comes to, you know, overall, right, Patrick's right. Overall, you want to stay away from oil. You want to stay away from the travel industry. But you can't refute that variations of trades throughout this cycle. I mean, it's popping. Like, it goes from $15 at Carnival, goes from $15 to about $17 in a week. That's a huge increase. Let me just see how that turns out to be. Well, I can't do it on here. I'd have to be on my phone. But yeah, that's a huge increase, right? When you're looking at price valuation. So as a Delta trader, I'm usually in trades for about 2 to 3 days, maybe even less. I trade for a day. I'm looking at those breakouts, and I'm seeing that in stocks like this. So I'm going to trade it for another day or two, and then probably sell out for a profit. I'm looking around maybe 20%. Which is different from 20% in the options, right? It'd be about maybe, I don't know, 100, 200% maybe I'm looking for. Anyway, so the oil industry, right? So cycling in, I think the solar industry is actually, you know, and Max, you kind of mentioned something that was interesting. The oil money is going to the solar industry, and I feel that you're right. I see that happening. Yeah. I mean,
because Patrick and I, you know, we're sort of in the solar industry, and
right.
Our job is to help people, consumers, transition from getting their energy, their expensive energy, from, you know, Dominion, Duke Energy, and sort of have them go with solar. And so now Duke Energy, Dominion, they've lost a client, so their income's diminishing. So, you know, the solar industry and the energy industry are sort of eating each other. And right now, you know, the future trend, solar is much stronger. And so, that's why we're looking at trends. We're sort of seeing in the future, is this sector getting stronger or weaker?
Right.
And so my two plays are tech. So I'm going to disagree with Patrick about tech and say, look, it got really hot. It's cooling off a little bit. But in the future, that sector is going to keep expanding because we're not going back to work immediately. So we're going to keep developing new apps, new technology. And so more people will use more technology per day than they are using right now. So that pie is getting bigger. So even if you don't pick the perfect stock, a small company is still going to expand in that development. And so the other one is, I'm going to agree with Patrick with the health sector, just because the demographics are helping that. The baby boomers retiring and health problems. So to me, those two pies are the only two sectors that I believe are expanding. Everything else, you can sort of make an argument as to why that sector is going to decrease. So that's what I'm talking about, and that's what I said at the beginning of the show. When you find the pies that are increasing, it's going to make your job easier, because even if you don't have the perfect stock, you're going to make money. And so that's why when you what?
Oh, go ahead.
No, I was just going to say that, timing and going with the cycles will make you a profitable trader, even if you don't really understand a lot. So, those are pretty easy ways to get into it. What were you going to say, Everson?
It's pretty interesting that we're talking about all of this because, as we were having this conversation, I look at something on the Seeking Alpha, right? It's an article of QQQX, and it says sell now and buy on the next crash. In support too, I've looked overseas with the Euro market. UK right now is a big problem where their cloud technology has been shared between China company and the United States, company in the United States, which is usually like your Amazon, your Google. They hold some of the biggest servers, right, for that cloud tech. That being said, they feel like their privacy as well as like their healthcare information is being compromised, which it is, considering that it's being stored in servers in China, it's being stored in servers in the United States. So China and the United States, if they wanted to, they have access to all that private information. So they're concerned in the UK of that technology. So they're moving into the tech sector. So in that cycling, it kind of fits into play, I think.
I'd like to add something real quick.
Okay.
Sorry, Max, I don't mean to interrupt you, but Everson, actually, we kind of teach each other things on this show, and that what's interesting is Everson loves to think about government regulation. And so when you were talking about the solar industry earlier, kind of reminded me that that's actually one of the industry that's going to get over time, that's going to be very, very favored by governments. Like in Virginia, they mandated that the energy companies by 2050 reach 100% renewable energy, right? Well, that's massive money that's going to be implemented, and involved in that, all the renewable energy, whether it's wind, whether it's solar. So that's one of the things. Same for, there's 15 states that just signed a pact to encourage the tractor trailers to become electric vehicles, right? Well, you can assume that over time there's going to be more than 15 that are going to join, and they want by 2030 to have about 30%, I believe, the Class 8 tractor trailers. So Tesla might be advantage with that. Hyliion might be advantage with that. So if you look at government regulations, that can push you into some of the sectors too that are going to be favorable.
Yeah, but that's sort of the previous conversation that I had on the previous episode, where I'm saying that entire pie is shrinking. So even if you pick the correct stock, the numbers are going against you. And I'm saying that there's a lot more money to be made somewhere else. That's just my personal opinion.
In renewable energy, you disagree with that?
Well, no. When you get into transportation, that's where I feel like the numbers are going against you. So you really have to pick a really good company. Now you're talking about renewable energy against energy. That's a really good play because but the thing is, the consumption of the energy is going down because we're becoming more efficient, and so that's sort of going against it. And the other thing that's going against renewable energy is the tax credit is diminishing. at the end of this year, it's dropping down to 10%, and then it's going to disappear after that. Actually, no, I think this year, after this year, it's
22.
dropping down to 22. The year after that, it's going down 10%. So, but, I would still go for renewable energy instead of the energy sector. But, that's all the time we have for this show. You can tell that we cover a lot of ground here. We're trying to help you guys make that next dollar, if not the next $10,000. So we're here to provide a lot of information for you guys. And the most beautiful part about this is we're like teaching each other as well. I've been in the industry for 10 years and I'm still learning from these guys. It's pretty amazing. So, hey, click like, subscribe, send us a comment, bring your friends to the show because, we're here to help you get leveled up to the next stage. We really enjoy doing this show. So on behalf of Everson, Patrick, and myself, we'll see you in the next episode. Make it a great trade or not. The choice is yours.